This report is from today's CNBC Daily Open, our new, international markets newsletter. CNBC Daily Open brings investors up to speed on everything they need to know, no matter where they are. Like what you see, you can subscribe here. Uncertainty over policy path U.S. Federal Reserve officials are largely in favor of interest rate cuts in 2024. According to the minutes of the Federal Open Market Committee meeting in December. However, there was unusually elevated degree of uncertainty over when, or even if, cuts will actually happen this year. Still, markets are expecting 6 quarter-point cuts. Blow to markets U.S. Markets fell Wednesday, spooked by minutes of the Fed meeting in December, as the 10-year U.S. Treasury yield briefly topped the 4% mark. The Pan-European Stoxx 600 ended the day 0.86% lower. Shares of Maersk rose 3.83% on news that freight rates will increase over route diversions, but the gain wasn't enough to lift the broader index. Soft landing on track. Richmond Federal Reserve President Thomas Barkin expressed confidence the U.S. economy was on track for a soft landing. That is, a scenario where inflation subsides to 2% or below without causing the economy to contract. However, Barkin sees 4 risks to the soft landing. Growth could reverse. Unexpected shocks could occur. Inflation might not dip below 2%. High demand could keep prices up. Fears of war spreading. Al-Aruri, the deputy political head of Hamas, and 6 other members of the Palestinian militant group were killed Tuesday. His home in Lebanon's capital of Beirut was reportedly targeted by a drone strike. Lebanon has claimed Israel is responsible for the blast, but Israel has not claimed responsibility for it. The incident has sparked fears the war in Gaza could spread beyond the Palestinian enclave. Hottest stock on Wall Street. One major technology stock is so hot on Wall Street that, in one day, 5 analysts picked it as their favorite stock. On average, they see the stock having an upside of almost 20%, driven by a strengthening outlook in advertising and artificial intelligence. The U.S. Federal Reserve hasn't lost its role as one of the main driving forces for markets. Last December the Fed put its foot on the accelerator for stocks, perhaps inadvertently, when it announced its projection of 3 rate cuts for 2024. Yesterday, minutes of that December meeting caused stocks to plummet. The good news first. Minutes showed Fed officials concluding rate cuts in 2024 are likely. Almost all participants indicated that, reflecting the improvements in their inflation outlooks, their baseline projections implied that a lower target range for the federal funds rate would be appropriate by the end of 2024, the document said. But that's nothing new. We already knew that from the dot plot released last month.